Hi guys, I'm driving back from work and I've just read the news about the Fed reducing the tapering. This is incredible. I'm actually at a traffic light at the moment, just waiting to start. But basically, this is unheard of. And what is really incredible is that the market is actually up. Can you believe it? This is just unbelievable to start with. But I wouldn't be too, hopefully you won't be able to hear the noise of my 100 years old car. It's just so incredibly old and the engine is just about to explode. But basically, what is unbelievable is that the market is up, but the actual fruit of this decision will be seen later this year, because they just announced a bit of news. It's just something that will change and will make the market change, as the video that I actually recorded yesterday and published yesterday. But basically, just in summary, we are gonna see a potential gap in the treasury market, which is potentially gonna create a very high spike in bond yield. Like, no one buying bonds because basically that's the liquidity problem that is lingering in the bond market. Well, what is gonna happen is that the bond yield will have to go up to make the bonds more interesting. And what will happen then is that once the bonds become interesting enough, money will start flowing at an incredible rate from stocks into treasuries, into bonds basically. And so that will be the potential slow, and I'm talking about slow decrease of the whole stock market. I'm talking about the S&P 500 and everything. So with this money just leaving stocks, that will obviously cause the whole market to come down. Obviously today the market reacted irrationally, as normally happens, and they also looked at like, for example, Tesla is up. Yesterday I told you that I changed my portfolio. I sold off some of my Tesla, and the reason is because I believe, obviously you cannot really time the market, but I believe that it's possible that Tesla will now come down a little bit. I'm not talking about a massive crash very quickly, but given the massive increase in price that it has had over the last month, or actually it was month and a half. Sorry, I'm trying to get into a lane, but basically it's just such a massive increase that it won't like sustain forever. So Tesla, I still believe that in spite today's like upside, it might come down a little bit more. And hey guys, if I'm wrong, well, just beat me up, like just drop a very shit comment. Let me see if I'm still in focus. But basically, just beat me up. Just drop me a comment, hate comments, everything. Just tell me, Marco, you're wrong. Tesla will just go up. Stocks only go up. And we know that on this channel, we always talk about this. But I just wanted to give an update on this bit of news that is incredible. And by the way, going more in detail, 15 million is it million? No. It's 15 billion of money that won't be injected, will be reduced every month by the Fed, and they will not will start the tapering. So that means that pretty much soon, I would say in the next 2 to 3 months, we're gonna start seeing this increase in bond yield. There is really no escape. Sorry about that. That is not the Rona. That is not the Rona. But what I want to tell you is that as soon as they start the tapering, and probably as soon as they announce the date they're gonna go for the tapering, probably, I'm not sure, I'm gonna make a separate video about it, but I don't think they will tell us when the tapering, the actual moment they're gonna start like dropping their tapering. Because if they tell us, then the market will react on that very day. They'll say, okay, from today, like, we're gonna just drop. And they're gonna, obviously, we are talking about not timing the market here on this channel, but most of hedge funds, they're all about timing the market, and most importantly, we are talking about trading algorithms. So if the news would come out, obviously trading algorithms would go all out and just dump stocks, buy bonds, and all of that. Actually, what can happen is the opposite. They might dump bonds. They might dump bonds because they have obviously bought some bonds in the past, but now the expectation is that in the future it will go up. The yield will go up. So it will kind of become a bit of a musical chair type of activity. So basically, initially there will be all these hedge funds dumping the bonds, because they obviously foresee the bond yield to be higher, and that will actually increase and create probably massive spikes, sometimes even very big spikes of bond yield, and they basically, this bond yield will go up and up and that obviously won't reach like incredible numbers. I'm not expecting any 20% yield or anything incredible, but when the bond yield will become interesting enough, and that will be over, the time that the Fed will start this tapering, then at that point we are going to see the shift from stocks into bonds, and that moment is when the stock market might go down like a lead balloon. And I'm not really a bear at all, as you know. Sorry, again, not Rona. Basically, the stock market will not just go down. This is obviously my prediction. It's gonna be limited in time. How long is gonna go down for? Well, that's incredibly obviously a question that no one can answer. No one. Do not believe anyone. But it can happen that it might just go down for, I don't know, it could be a year. I'm not joking. And that's the reason why I took profit yesterday, because I said, look, if it has to go down for a year and I want to buy myself a house, then, which is basically my investing goal. By the way, be sure that you need an investing goal. That is absolutely what you need. Make sure that you have your investing goal written down, because that will change the way you invest. But as soon as basically this tapering, this potential crash might happen for a year or two, and I'll be making more videos so that you stay up to date on this kind of crazy news, even from my car now. Yes, I'm gonna go all out. I don't care. Like, I'm sorry for the quality of the audio and the video. I apologize now, but it's gonna be like this. So this is what, as I told you, I'm still invested in all my positions. The only one that I trimmed was Tesla. Everything else is still on the table, and very much I'm gonna look more at commodities, because commodities will actually go up in price. That's the major difference, because stocks might come down, but commodities are affected by inflation, and inflation might really basically make us money from a commodity point of view, if you have the courage of buying things like gold, or I'm talking about, I don't know, natural gas, oil. That is something that I have in my portfolio as well. But all of this I will look at in my next videos. So thank you for watching, and I'll see you in my next videos.